What is going on, my friends, and welcome back to the Crypto Catch Up. Of course, your number one place to catch up on crypto. Now, today we're going to be taking a look at an article that released about an hour ago recently from Blackrock that I really do agree with. It's a warning to crypto investors, and I think you need to hear it. So we're going to cover that today. We're going to go over what's happening in the market, where things are at from a fundamental perspective, a technical perspective, and get a full around catch up. And so with that said, let's not waste any more time at all, and let's get straight into it. Now, guys, don't forget, if you do want to trade on Margex, whether it's Bitcoin, SOLANA, JASMY, or any of your favorite cryptos, you are going to get access to up to a $500,000 KASPA airdrop that they're running right now, and up to $10,000 in bonuses when you do sign up and start trading now. And the greatest part is, to sign up, you don't need to KYC, meaning you don't need to tell them who you are. You don't need to use a VPN. You can just sign up, start trading again, get up to $10,000 in rewards, get access to this up to $500,000 KASPA airdrop that is only going to be going on for another week or two. So make sure you do check that out down in the description below. But overall, looking at this market, it has been a rather ugly day. We have a few doing well, right? ICP and Aave. Aave's been consistently pretty doing damn decent, but other than that, not a lot going on, right? We got Whiff, we got Floki and Bonk putting in some major losses, which is interesting, right? Because a few days ago, we saw that some of our meme coins were actually outperforming some of your top alts. And so now seeing some of the biggest losses for the day being things like Whiff, Bonk, Floki, etc. It is just weird to see what this market's doing. It doesn't really seem like there's a lot of rhyme or rhythm to what is doing good and what's doing bad. Just kind of popcorn effect still. Now, in the last week, things are still roughly, I would say doing pretty damn decent. And of course, on the monthly, although it's not as pretty, we are still seeing some pretty decent recovery as well. So we're definitely not in a terrible spot in this market right now. I would definitely say that is the case, but we're not in the best spot, obviously. And I'm sure you guys can feel that yourselves. Now, from more of a technical perspective, let's look at what Bitcoin is doing. Of course, because we are in Bitcoin season, Bitcoin's leading the market. And what we can see is Bitcoin's still within this liquidity zone. I've talked to you all pretty consistently about the fact that we have this ascending wedge. And when you lose an ascending wedge of that nature, these previous points of support on that wedge are going to create a liquidity zone. This is the zone that's the most likely to try to bounce the price back to the upside. And if we lose all of these levels of support, we're really in for it, right? We're probably in for a move below $50,000, and we've been tracking it very closely. Well, what's happened is we lost the liquidity zone for a split second, came into our Fibonacci zone from the swing low to the swing high. We have held support really well here, and it does seem as if Bitcoin could hold here. And we never know. Maybe it'll put in some sort of double bottom. Maybe we'll put in some type of cup and handle. You never really can tell, and obviously we're just guessing at this given point. But Bitcoin is holding up well right now, which is a very good sign, and I do like to see it. Now, from more of a fundamental perspective, we have moved pretty far out of that fear zone in which we were in, right? We were damn near an extreme fear a couple of days ago. Now we're getting more back to a point of neutrality, and I think neutrality is where this market should be. I don't, again, understand why people are so damn scared and of what they are scared of, but they are, right? And so I would say getting towards that 40, 44-ish, 45-ish area makes a ton of sense, and I am glad that obviously in those moments in which we were super low into fear, as we could see back here, right? Some of these times back here where Bitcoin, hit 47K, 48K, whatever, we were able to pick up some Bitcoin. So definitely happy about that. And I think getting back to a point of neutrality for the market makes a ton of sense. Now, using that, obviously, how this market has reacted or how these cryptos have reacted is a lot of our RSIs are also starting to retrace back to neutrality, right? You can see BNB, Bitcoin, BNB, even XRP and many of our major alts and even smaller alts getting right back towards that neutral zone on the 24-hour. And if we look at the weekly, although it is moving slow, it is moving upwards as well. Of course, it's going to move slow. It's a weekly indicator, a weekly moving average. But at the end of the day, we are, again, seeing the majority of our major cryptos starting to push back up towards the zone of neutrality. Now, finally, of course, what happens with that, what we're going to do is we're going to look at the liquidation map to gauge what people are doing. And what you can see here is that a lot of our different charts, let's look at the 7-day, let's look at the 30-day just to make sure we're looking at this. Yeah, we're seeing a lot of balance, or a lot of imbalance, actually is the word that I'm looking for, in the sense that, on the 1 day, there are more liquidations that'll happen to the upside than the downside. So, of course, in the shorter time frames, you would expect this market to move upwards. But if you just go out to the 7 days, there's way more liquidations that'll happen to the downside than to the upside. So then you would expect the market to move downward. And then if you look at the 30-day, there's way more liquidations that'll happen to the upside than the downside. So you don't know what's going to happen. And that's why we're at a point of neutrality within this market. That's why crypto fear and greed is starting to get to neutral, because people just don't know what's going on. And in moments like this is when you are actually surprisingly at the most, like this is the most risky, right? In moments like this, when you just don't know what's going to happen, that's when things get the most risky. Why? because of what BlackRock is warning us about and because of what I actually talked about earlier. Now, as you guys know, I did announce that we just launched a Patreon here on the channel, and over in the Patreon, I gave my thoughts on this article from BlackRock. Now, if you do want to go check out the Patreon, it is linked down below. Again, you can see my buys and sells. I actually bought a little bit of Bitcoin today on my DCA, bought a little bit of Solana yesterday and some more Bitcoin. I have a pro trader putting some trades in there. We have daily technical analysis, daily fundamental analysis that goes over all of these charts we talk about here on the channel. We have a newsletter that comes out every day, just going over the basics. So make sure you do go check that out down below. But we did talk over there this morning about what is happening and what BlackRock warned about and what they are kind of being cautious about right now. Okay, so let's go ahead. Let's kind of dive into the article and see what they say. So BlackRock is basically warning that there's going to be a ton more volatility that's going to enter the market, and that it's going to possibly even cause these little mini spikes and crashes, and things could very well get pretty crazy. They say we see multiple factors driving market volatility: resurgent recession fears due to some softer economic data, pre-U.S. election jitters, and profit taking as investors make room for new stock issues. They say we don't see the Federal Reserve cutting policy rates as sharply as markets expect. And so, of course, as a result of this, what they were speaking about is that, look, with all of these different catalysts and all of these new things that are going to start approaching in the market, there's going to be volatility. Hell, there's already been volatility. We've been seeing hundreds of millions of liquidations every single day on both sides of the coin, bulls and bears, constantly getting liquidated. And you can see it, right? If we go out just to Bitcoin's price, you can see what that looks like. What that looks like is this, all up and down, and it's just constant, right? This, big move, this, that type of movement, those type of herky-jerky ass reactions are what cause liquidations, and BlackRock is expecting it to get worse. Now, you might say, Tyler, well, why is this a bad thing? The reason it's a bad thing is because in moments in which volatility is at its highest, people lose on both sides, and that's when it really sucks. Because I've told you, I think that the people at the top of the crypto market are lizard people who are trying to take all of your crypto, right? I think they want as much control over it as possible. The easiest way for them to capture your crypto is by liquidating you, quite simply. And so in markets like this, when bulls are getting liquidated, bears are getting liquidated because there's volatility, and this is happening, and there are top side liquidations, bottom side liquidations, top side, bottom side, over and over again. That's whenever people are losing the most, and that's when people actually struggle the most. And so as a result of this, I would agree with them in the sense that you need to be very, very careful right now. You should not be going super high on leverage. That's what I was actually talking about over in the Patreon. I said it towards the end here. Let me go to Tyler's thoughts. I said, as a result of this, I do stand true to the idea that heavy leverage is a really bad idea right now. And the best approach is strategic dollar cost averaging, just like I'm doing right now, right? Just buying some Solana, buying some Bitcoin, and taking it slow and taking it smooth. Because if you are going on heavy leverage right now, you're putting yourself at risk of being liquidated almost for no reason. I think that there is almost a guaranteed chance that we will see crypto higher one day than it is today. So why risk it, right? Why risk it? That's just it doesn't make a ton of sense to me. Why risk it on short-term leverage when in the long-term growth effect, you almost are guaranteed locked in to see growth? So that's where I'm at, and that's the warning of the day, and that's just what I want you to be aware of. You have to take these volatility moments seriously, especially if you're leverage trading. And so because of that, of course, let me know your thoughts down in the comments below. Are you worried about the volatility? Does it not really impact you because you are just a dollar cost average and sit back type of person? Are you a trader? And if so, how are you handling the volatility? Are you setting your stop losses further? Are you making sure that you're not trading too high on leverage where your liquidation prices are lower and higher? What's your thoughts? What's your plans? Let us know down there. Of course, you guys know I like to respond to every single comment, so make sure that you do, of course, leave us one down there. While you are there, if you are new to the channel, make sure you do subscribe, so it helps out, of course, a ton. And I can't wait to see you all in the next catch up. Peace out, everybody.